Okay, let's take us a quick little look at Twitter. They reported earnings before open today. Stock is up 6% in a time in which the market's down, so there's got to be a good reason for it, right? You'd think. So let's take a look at these earnings and see what's going on with Twitter. Well, I got to be honest. I'm very confused. Quarter 2 non-GAAP EPS of negative 16 cents, missed by 16 cents. GAAP EPS of a negative $1.56, missed by $1.41. I don't know if this is, a joke or what, because it kind of seems like a joke. Right? I mean, am I the only one that thinks that's crazy? The stock's up, by the way. Revenue down 18.7%, missed by 24.51 million. What? So you're telling me these other companies saw a downward movement because of earnings? When you're talking about Facebook, Snapchat, when they posted actual beats on these aspects and better revenue numbers for sure in terms of growth and definitely way better EPS numbers. I mean, am I the one that think that's a little bit insane, a little bit unfair to see this company rise while the other companies were, taking hits? Anyways, daily active users is the reason the stock is up. 186 million, which is up 34% year over year compared to a consensus of 172 million. Now, is user growth that important to them when ad rates likely will not recover for a solid year probably? But is it that important to them right now? That's what I find a little bit crazy. I don't know. Investors are smoking something weird. That's all I can tell you. I don't think I'm the one smoking something weird. I think the investors are. So, ad revenue fell 22% year over year, which was below the consensus. The ad recovery stretched through the quarter, with the exception of late May and to mid-June, when many brands pulled their spending due to the U.S. civil unrest. That's right, Twitter, you're getting banned, or ad polls too, which is stupid, by the way, but total ad engagements were up 3%. Cost per engagement dropped 25%. Twitter reported an average monetizable daily active user of 186 million. As we saw, adjusted EBITDA was 132.8 million compared to the consensus of 109.4 million. Again, it's adjusted. I literally don't buy this at all. I want to look at the actual net loss, please. Costs and expenses were up 5%. And for quarter 3, Twitter plans to increase CAPEX in absolute dollars from the 162 million of quarter 2. So we'll look obviously at this letter to shareholders. It's got a lot of content in here. And again, you see year-over-year growth, the story they're trying to tell here, the constant growth. Now, obviously, this quarter and last year saw a big benefit because of really coronavirus and lockdown. People using social media a lot more, so I think that's what people might be excited about. So, overall, profitability-wise, total costs and expenses were $807 million, resulting in an operating loss of $124 million. Could be a lot worse, but definitely not beautiful to see a loss like that. You really don't like to see that. Obviously, their big thing is obviously going to be average daily users. We've completed our server rebuild and are making progress accelerating our performance ads roadmap, beginning with mobile application progress, our promotion. So again, we talk about they definitely need to rebuild the platform if they got hacked pretty majorly. There's no doubt about it. Pretty major. I mean, what you look at the bottom right here is this chart that you need to see as far as GAAP operating loss. I mean, look at that. That's a big loss compared to last year when they actually gained. That's what I don't like to see, in my perspective. Obviously, that's a shareholder letter. There's going to be a lot of words, and most of the stuff we don't care about that much, because there's nothing major as far as those words are concerned. Okay, not as far as looking at this stock. It's all usually just fluff to say, hey, this is why our company needs to get invested in. Please keep investing. But So U.S. advertising revenue decreased 25%. International advertising revenue is down 20%. So again, it's not just U.S., it's worldwide right now, obviously, as companies are facing hits and they're not able to spend on mobile ad spend, really. So it's kind of what happens. It's not unexpected by any means. So that doesn't shock me. Again, ad engagements increasing is good for them. People clicking on their ads more. Research and development expenses grew 36% due to high personnel-related costs. That's good for them. I'm proud of them for that. So overall, net cash flow from operations, you see major decreases year over year, and the adjusted cash flow makes more sense, but major difference year over year. And they're going to say the issues for that, but I do want to see, obviously, look at this balance sheet because they just keep monthly daily active users rose. Well, guess what? At some point, you got to just be like, gosh, that's a big miss. And if monthly daily active users is all it takes, I mean, I'm proud of them for that. That's what investors want to buy in, but they don't buy into the other companies. Like, I don't know. I just think it's unfair that Snapchat went down, but a company like Twitter doesn't for this, really similar results. But assets, as far as total current assets, $8.49 billion versus 6 months ago, $7.6 billion. Total assets in general in this company of $12.5 billion versus $12.7 of 6 months ago, so less in terms of long-term total assets here. Now, overall total current liabilities of $691 million. Good to see there. The overall short-term current liabilities did decline, but long-term you see an increase there, $4.7 billion versus 3.99, or really $4 billion. So you saw an increase in liabilities, but a decrease in assets for the most part. So that does need to be mentioned, for sure. But obviously it's an unprofitable quarter, so you kind of expect that to happen. But still, total stockholder equity of $7.8 billion is quality for this company. It's good to see assets really outweigh this by a little bit under 3 times the amount, so 2.5 times. So it is good to see that for sure. You can't lie about that. But there's a lot more I'd like to see out of this company. I mean, I get everything going on, but I feel like this quarter was it's a very bad quarter. And I think they should be doing a lot better than that. I mean, again, you can say I'm wrong in that aspect, but I just kind of expected more from this company. Now, again, valuation's not extremely expensive on this company, but now it gets a lot more expensive when you talk about the fact that year-to-date stock's up. I mean, stock's up over 20%. Still, EPS declining pretty massively this quarter. You need to mention that, but overall, I'm not a fan of the stock personally. More of just really the principles of the company I just can't get down with, so that's kind of why I don't enjoy it. But if you invest in Twitter, I get it. I just don't think Jack Dorsey's focus is on Twitter enough. I think Square should be his main focus, and Twitter is just a little bit of garbage. It's a little bit of garbage, can't lie to you, but I hope you enjoyed.